What up, guys? It's November 8th, and this is the second video of the day, but let's go over Dropbox and my take on those earnings from last week, Thursday. So they reported Thursday after the bell. They got hit about 10% to the downside on the following day. So I want to kind of explore these earnings, go over them, kind of like a teaching lesson as usual. But before we do, please hit that like button. I really appreciate it. It shows me I'm doing a good job or that I'm giving you something of value, which is my hope here. Also, hit that subscribe button if you want to keep getting my videos. Definitely appreciate it. Okay, so let's get going. So first thing I want to start here is the investment presentation from the investor relations side. Okay, so this presentation shows us here the product portfolio in what Dropbox offers. This is more of a review for those that don't have Dropbox stock or are thinking about it. Okay, so this is divided into the main Dropbox product, which is the cloud services and file sharing, video sharing, whatever sharing that is digital. Okay, and of course it's for individuals and teams. That's your business here, starting with family and enterprise. Of course, the higher you go, or the lower you go actually here, the higher the price as far as how much you pay as a user. You also have some cross-selling platforms here. HelloSign, which is their answer to DocuSign. This is a DocuSign competitor. I know that they're using up to 21 languages, which I don't think DocuSign has. I could be wrong, but at the end of the day, very good growth from HelloSign and DocSend, which is sort of like an artificial intelligence sort of solution for documents or invoices or whatever you send. For the user that sends them, they know what the person who received the document did with it, or what changes they made, or what a team did with the project that was sent to them. Okay, so very good solution here. These are the fastest growing segments, part of the conference call. They're very excited about these two. They continue to grow at a very fast rate. All right, so that's Dropbox in a nutshell right there for you guys. So let's go over the earnings numbers. So, of course, these earnings numbers are divided into EPS, that's earnings per share, revenue, and forward guidance. Okay, so we have 37 cents of EPS, earnings per share, versus 35 cents expected by Wall Street. It's a slight beat, not a very significant beat, in my opinion, for 2 cents. Revenue, $550 million versus 544 to 546. They give a range on that. That's a decent beat for revenue. Guidance is a little bit mixed, and let me explain to you here. So the full year guidance, they're not talking a lot about quarterly guidance. They're talking about more full year 2021 guidance. It's essentially mixed, somewhat positive, okay, because they're raising the revenue guide 2.14 billion versus 2.13 billion. Small difference there. Margin guidance, which is of course how much money they make on their bottom line, mostly maintained on the margin guide as a percentage, and free cash flow guide from 730 million from 710 million, so $20 million different. They're expecting in free cash flow. That's a little bit of a positive there, in my opinion. So I want to move you guys into the valuation measures brought to you by Yahoo Finance. So of course we see here that they started the year somewhere around that $22 range, and we're right now $28.14 as the stock price. We see here in the statistics tab that it's selling at a forward price earnings ratio of 19 times forward earnings, which is not expensive against the market. It's 130 times current earnings. I don't know if that's correct. I think that's a mistake. I think that should be better. But the market cap, effectively about an $11 billion market cap, that is correct. So I want to take you through this slide here of the investor presentation here to kind of talk about the health of the company. So we have 700 million registered users at the time. I think this same time last year, they had close to 500 million users, which is a healthy amount of growth. I think they actually grew by about 350 million users overall for all the services. So that is a very much positive, okay? So they have a ton of content, ton of paying users. I mean, most countries don't have this many people, and 80% of the subscribers are used for work. So this is mostly a work solution, okay? So one thing that I want you guys to understand about Dropbox is not giving you these crazy tech company type growth numbers. What they're giving you are year over year steady and very moderate growth numbers, okay? And you guys can see here that essentially revenue, free cash flow, which is very important. I love free cash flow businesses, okay? Margins and operating margins are always in a steady uptrend, okay? These are not like incredibly big uptrends, but they're steady uptrends. So this has always been sort of like the perfect stock for me that gives me steady growth at a reasonable price. And I think that's what Dropbox can do for anybody as well, given you have the right entry point. Here's some more financial highlights here that I like to look at, which is the annual recurring revenues, paying users, and ARPU, which is annual revenue per paying user. Also, same thing, steady uptrend, guys. Very solid. Nothing wrong with these numbers. No reason here to sell the stock and drop it 10%. So I want to bring you guys now here to the actual earnings presentation. And here you should all go through these, fiscal third quarter results. They're all very good, very impressive, very steady growth. You guys see that the growth is fairly steady, fairly moderate, okay? And I don't mind that at all. I'm totally fine with these numbers. But I think the most compelling number here is this one. Cash and cash equivalents, short-term investments of almost $2 billion, okay? So if you take the market cap of the company at $11 billion, you take that $2 billion away for cash and cash equivalents and short-term investments, now you get a valuation of $9 billion. So all of a sudden you don't have a forward PE of 19. You're looking more at a forward PE of like 15, 16, which is very attractive, I think, in my opinion, which makes this stock very cheap on a valuation basis, rather. And here I'll show you guys a copy of the balance sheet from the 10Q filing. We see here these are the two most important aspects for me for this balance sheet. That's the $1.9 billion in cash and cash equivalents and short-term investments. Okay, when it comes to the asset side, that's pretty much all that counts. That's all that I'm adding there. I'm not adding goodwill, other assets, nothing like that. I don't care about any of those things. What I care about now on the liability side is anything that speaks about debt or liability or long-term, short-term debt. And we can see here we don't have any of that. The biggest thing we have here is deferred revenue. And deferred revenue is money for services that they haven't provided yet. So I don't count that against the balance sheet. So this is effectively pretty much a debt-free company. So of course, guys, when it comes to the financials, this is a financially healthy and steady company that is still growing, no debt, good balance sheet grade, growing free cash flow, capability for share buybacks. They've only purchased about maybe 10% or a little bit over 10% of their share buyback. They still have most of $1 billion for share buybacks with free cash flow coming into the company. So health-wise, very, very healthy company that is still growing at a moderate pace. So, of course, over all this that we just talked about, we also have to listen to the conference call. And I kind of want to go over those highlights because I think those are important to go over. And I kind of just took notes as I listened. And you should do the same thing because I just kind of listen to the call and take notes as the call is going on. You can also listen to read a transcript online of the call so you can get a better idea if you're a better reader than listener, okay? So we're talking about record free cash flows this quarter. Excellent. No reason to sell a stock there, okay? So there's an overall belief from management that the pandemic has actually caused a change, a permanent change into at least a hybrid work environment or a work from home environment in which people are going maybe 2 to 3 days out of the week to the office, but staying at home 40 to 50% of the time of their work week, okay? And they're going all in on these features to allow these people to work from home and to cross-sell them into other features like HelloSign and DocSend, okay? So some other highlights here, nearly half of new basic users come from their mobile platforms, okay? And their mobile platforms have some really good features, okay, which are the replay feature, which allows people to take short videos as a replacement for memos and emails, which I think is very smart. I'd love to send a video instead of an email. That would be fantastic, okay? The other feature that they talked about was the camera feature, in which the mobile users are actually uploading camera content like pictures and videos and sharing them all across the cloud. That's something that's very popular on the mobile platforms, which are probably not more business, but rather just your regular retail consumer, okay? Now, they're talking about freelancers and how freelancers are using Dropbox to sell digital content. They didn't say this, but I'm thinking NFTs are a possibility here. And NFTs, everybody knows that to be a big growing market. So I think that would be a positive if that's the case, okay? But here's a big part right here. They entered into a definite agreement to acquire CommandE, which is a universal search and productivity company that allows users to kind of seamlessly have a search bar on their desktops that searches for documents, tools, work product across different cloud applications. Okay, so if you have maybe an Apple cloud application or Microsoft cloud or an Amazon cloud application, it allows them to combine them and search all of them at once to give you everything in one spot, which I think is very smart. And here you have the CommandE website, okay, and it's giving you their search features and kind of how to look. And this is something that people seem to like very much, okay. And I'm not very familiar with it, but it's an acquisition. It's going to clear in Q4. So next quarter, this acquisition will clear for Dropbox, which will allow a new revenue stream to come into the business. So they're expanding. They're announcing even here, hey, we're joining Dropbox. We've decided to share that we've signed a new agreement to be acquired by them. So perfect for me and as a shareholder. Now, the other piece of news I want to share real quick is their founder, their CEO, is saying we're gearing up for the Metaverse. So, of course, everybody is going crazy over this Metaverse trend that is coming. It kind of feels like the 5G trend of maybe late 2019, mid to late 2019, there was a 5G trend in which people were building their 5G portfolios to prepare for this 5G explosion of new things, all 5G, automotive, cell phone, towers, everything. It kind of feels like that. That's what the Metaverse feels like. And these guys are saying we're gearing up for the Metaverse. We're saying our strength is in content, so helping get your stuff into that virtual world. So making what document presentation or the infrastructure, integrating all that into the Metaverse. I think that's something that's positive. I'd be happy to see what that looks like. Now, to close it up, the points here made in the question and answer session of the conference call, okay? There were points made about doubts of a hybrid work environment, okay, in which the analysts were saying, hey, we're kind of doubting that this hybrid work environment that you guys are banking on is really that solid, and there may be not a hybrid work environment by the same time next year. Okay, so that is definitely a danger and a risk to Dropbox. Okay, they're also saying that the mobile experience and the key features like replay and camera uploads are driving very much positive growth for Dropbox Mobile, and that the churn rate is low and improving. And of course, real quick, what is churn? Churn is like when you have 1,000 Netflix subscribers and 10 or let's say 100 cancel their subscriptions, that means you have a 10% churn rate. People that cancel subscriptions are churn, okay? So at the end of the day, that is it for today's my take on Dropbox earnings. I expect the stock to go higher. I have a much higher valuation, maybe anywhere between a 25 to 30 billion valuation on the stock, which will reflect a price of what, 45, 50, somewhere in there for a sell target for myself. Okay, if you guys have any questions, let me know. I've gone far enough. Again, join us in the Stock Gladiator Discord or reach out me on Instagram, DM, Twitter, everything. Peace out, guys.